So I strongly believe that there is one last piece of the puzzle for a lot of traders out there that will get them over the hump to profitability. Now, when I say a lot of traders, I don't mean beginner traders, traders that don't have a strategy, traders that don't know anything about technicals. If you are a trader that feels like they know technicals, they know their strategy, but they're still not finding profitability, this video might be more for you. This video is going to be a lot about the psychology and some emotional control about trading that really is that last piece of the puzzle. In this video, we're going to talk about that, but we're also going to go over 2 live trades that I've taken this week. And these live trades that I've taken, the reason I'm profitable on them is due to the thing that we're going to talk about, that last piece of the puzzle. The reason I was able to profit on these trades is not because of technicals, not because of a strategy that I know, which is a small part of it, but the larger reason is what we're going to talk about in today's video. I hope you guys enjoy this one. I think it's a really good one for some of you out there. Press that like button, subscribe to the channel. Let's go ahead and dive right into it. So like I said in the intro, there is one last piece of the puzzle which really helped me as a trader, and in my opinion, that is accepting the uncertainties of trading. There's a book, Trading in the Zone by Mark Douglas. I'm sure a lot of you have read that, and he goes very in-depth about the uncertainties of trading and that we need to accept that there will always be uncertainties. We need to accept that we could be wrong in any trade that we put on. Now, what I think a lot of people run into is that they are not able to accept that they could be wrong in trading. And also, when they are wrong in trading, they are putting themselves in a situation themselves, right? They know what they're doing. They're putting themselves in the situation that if they're wrong, they are blowing up their account. They are losing 30, 40% of their account. They are making it so they cannot come back from that loss. We as traders cannot put ourselves in the situation that if we're wrong just 1 or 2 times, we blow up our account. We cannot be putting that type of risk in a position so much to the point that we can't accept that we can be wrong. We have to be good losers. We have to accept that we could be wrong in a trade. And if we are, which is that uncertainty, we don't know if we're right or wrong. There will never be 100% certainty in any trade you take. But if you like a trade setup, if you take that trade setup and it proves to be invalidated, accept that you're wrong. Take that loss. And that loss needs to be strategic. We need to know what percent of our portfolio we're going to lose, a comfortable amount that we can come back from, right? A 2-3% loss, and move forward and move on to the next trade. It seems like a very rudimentary concept. It seems easy, but it's not, right? When you're there, when you're live on the charts, when you're taking a trade, your greed, right, starts to come in. You put too much size in your position. You don't accept that you're wrong. This will lead to that never-ending cycle of taking too large of losers and not being able to come back from those losses. When we enter a trade, accepting that we could be wrong, understanding the potential risk of the position, knowing that if we're wrong, what am I about to lose here? Is this okay with my portfolio? Am I risking a comfortable amount? And if that uncertainty happens, the unfortunate uncertainty of being incorrect, can I come back from this? And am I okay with the position I'm putting on? This is all psychological, right? This is all the psychology of trading. And it's the most difficult part, right? The technicals, the supply and demand levels, the, reading the market, the price action. This is stuff you and I can learn. We can learn this. A lot of people can learn this. 99% of people can learn where to place supply and demand levels. There's a very small amount of people that can control their emotions, that can accept the potential that they could be wrong, and could accept when they're wrong to cut a position and get out, right? I'm sure you guys have all been in that situation where you know you're wrong in a trade, but you can't get your finger to press the exit position. Right? You can't get yourself to exit that position, accept that you're wrong, because either that position that you are wrong on is way too over leveraged and you are losing way too much money to accept that loss, or you just simply cannot accept you're wrong, right? And that's just a whole nother psychological problem that needs to be fixed, right, when you are trading. I'm sure you guys have heard this plenty of times, but it remains 100% true. A good trader is a good loser. Now, I want to try to take this concept full circle and actually apply it to some trades that I've taken over the last 2 days. I've taken some very nice rejection plays on Tesla and on AMD, using the NASDAQ futures, a certain supply level, to look for rejections off of. Now, when I enter these trades, which you'll see in the live recordings that I'm going to put in today's video, I am entering these trades accepting that I could be wrong and positioning myself in a position that if I'm wrong, I'm okay with the loss that I'm taking. And being okay with the potential loss and accepting the risk that I'm putting on makes it so that I do not hesitate to enter the positions, right? We can't be hesitating and thinking 3 or 4 times when trying to execute real time on potential trades. We have to get in, accept our risk, and understand that we could be wrong. Now, there's a lot of people that probably listen to me trade these live in the Discord community, but didn't take the trade because they were scared to lose, right? They didn't execute because they were scared to be wrong, right? And that's that point that I'm trying to make today. We have to somehow find that way to not be scared of being wrong. And I believe the best way to do this is to make sure you're trading with size that you're comfortable with. And if you're not okay with the size you're trading with, if you take a loss and it's too much for your blood, right? If you don't feel good after taking a loss, if you feel like you just blew up your account, or maybe you did blow up your account, then you need to reconsider the size that you're trading and make sure that when you take a trade, you are staying in your lane. Make sure you understand your risk aversion. Make sure you understand your personality when trading. So today, I'm going to share 2 live trades with you. You're going to see them here in the video. This is a Tesla rejection and an AMD rejection. Both trades I entered with the idea of a rejection on the NASDAQ market, and I entered it because I was not scared to lose. I was accepting of the uncertainties, and I was okay with the risk that I was putting on my portfolio. So here's the NASDAQ futures. I'm going to get over this pretty quickly. This is the 5-minute chart from yesterday, and we had some pre-market highs right here on the NASDAQ around 15,430. Now, yesterday morning, we had a very aggressive push straight into that pre-market high. Now, in this situation, I am looking for the pre-market highs to reject, and if I'm wrong, I'm okay with that, right? I'm accepting of that. So in the trade that you're going to hear, you'll see me entering Tesla puts, which is off a key level, with the idea of the NASDAQ futures rejecting pre-market highs. So if we go to Tesla, we're going to look at a very key 270 level on Tesla. If we go back to the 1-hour chart, we are going to see a key previous support at 270 on Tesla. Now, if we go to the 2-minute chart, what we're going to see is a perfect break and retest of that 270 level. So we're going to go to yesterday's price action, and right here, we can see that Tesla had a break under 270, a 2-minute retest of 270, and a very clean rejection of 270 right here. We can see that is around the 9:36 to 9:38 time in the morning. That is also about the same time that the NASDAQ futures were rejecting the pre-market highs. So you'll hear in the voice in the live trading, I was looking for a 270 break and retest on Tesla, which aligned with the NASDAQ futures rejecting pre-market highs. Now, I was okay taking this trade, which goes back to our original concept. I was okay taking this trade because I knew where I would get out if I'm wrong, right? I knew my stop loss, and I was putting in an amount of size in the trade that if I was wrong, if that uncertainty did occur, or that possibility of me being wrong did occur, that I would lose an okay amount and I would move on to my next trade. So let's go ahead and now run this live recording. You'll see how I traded this all live. But remember, right, when you're watching this trade, I'm entering with comfortable size. I'm entering with the idea that I could be wrong, and I'm accepting of that possibility. So keeping an eye on that Tesla 270 here, okay? Let's see if I can get a real clean 270 rejection on Tesla. That would probably be my top watch at the moment. I think we're probably going to see that move into that pre-market high on NASDAQ. That's where I'll really make my decisions here, is that pre-market high. I'm going to take a Tesla 265 put. Stop over 270. The potential of a pre-market high rejection and Tesla showing no strength. I'm okay with this loss. Please understand that. I am okay with losing here if Tesla goes over 270. But I like what I'm seeing on this relative weakness on Tesla. And if the NASDAQ rejects pre-market highs here, Tesla should get pretty aggressively hit off that. Okay, so the NASDAQ just tapped pre-market highs there. Okay, this is where it could potentially start for me. This is where my trade idea needs to start in the next few minutes. A NASDAQ pre-market high rejection and a Tesla 270 rejection. Tesla, I love this rejection I'm seeing. I need to see a little bit more follow through here. There we go. Yep. Yep. There it is. Come on down. Pre-market high rejection. Be a profit taker still. You never know what could happen here. That is just as clean as it could possibly be on this Monday morning. Okay, I'm half out of Tesla here, up 12%. Just in case we get a little bit of bounce still. Just making sure I lock up profits. That's so nice, man. Look at that pre-market high rejection on NASDAQ. Tesla 270. Just beautiful stuff. So the next trade we're looking at is a trade from today. This is on AMD. We knew coming into today that we had a very key supply at $103 per share. We can see rejections here, 103, right? Right here, 103. We have another rejection here, 103. We have another rejection here in the pre-market at 103. So my idea coming into today was if I saw a move higher into 103, I would look to fade that move. I have a plan, and I'm believing in it, and I'm trusting in it. And if I'm wrong, I can accept that I'm wrong, and I can move on from that trade. So we can see here, we're going to go to the 2-minute chart. We're going to go to this morning's price action. We can see that AMD this morning was squeezing higher towards my 103 supply. Now, what you'll hear me talk through with the group is that I was starting a position with the intent to add to it as we pushed into that supply. I was okay with the size I was getting into. I was willing to start entering the position for a fade off that supply. Now, as we started to get that move, I was adding into this position, and we had a very nice downside move for about a 40% win on AMD. Why did I win on this trade? Like the Tesla trade, I knew my levels and my strategy, right? That's number one and number two. But the most important part is I was getting in with comfortable size. I was accepting that I could be wrong. And if I was wrong, I would not lose an amount that would blow up my account, that would take me out of trading, that I knew, right, this is a good trade setup. If it's wrong, there's always that possibility. That's okay, but I'm accepting of it. And I know you hear this a lot. I know you're hearing this a lot in the video, but I can't stress enough how important this is for your mindset when you are entering the market and when you are trading. Let's go ahead and watch this live video. After that, I'm just going to end the video. So I hope you guys did enjoy this one. If you did, press that like button, subscribe to the channel, come back for some more trading videos. I will always be 100% brutally honest with you. You have to be able to control those emotions, control that psychology. It is so important in trading, more important than just understanding technicals and understanding levels. Once again, guys, thank you so much for the support on the channel. Press that like button, subscribe, enjoy this live trade to end it off, and I will see you guys in the next one. Peace. So I took some 102. I only took 10 of them to start. I'm going to try to get into like 40 total. So I took 10, a quarter of position here. I will add up to 40. Stop loss is over 103. I'm going to start trying to scale into this as it pushes towards that supply. I'm not going to add to it if it just breaks above 103. I'll keep it real light. Keep it at 10. Take a small loser. Okay, I'm going to add a little bit to AMD there. I took another lot of 10 contracts. So maybe that's like one contract for smaller accounts. Just trying to build a position up here towards that 103 supply. Okay, I'm adding again to AMD. I'm pretty much at my full size now on AMD. I'm willing to add maybe 10 more maximum. Okay, AMD looks good. Nice little reversal there. We're in pretty much at the highs. AMD looking awesome. 20% on AMD. Start scaling out of AMD if you took it with me. Profit should be looking good. There goes AMD. There goes NVIDIA. There goes Tesla. Beautiful.